Hello students, you are here to watch the corrections of error video, part 2. In this part, you will learn how to state the effect of correcting the error on profit and other different sections of the financial statements, state the effect of not correcting the error, and prepare this new statement called a statement to show adjusted profit for the year. So in our previous video, we did this example. There was a mistake in the previous video. The first error, there was an error in the error. The first error, right, it should be 20 instead of 19. In any case, the first example, we made some corrections to some mistakes in the journal entries. Right, now, the next thing we want to do is to look at what happens when we correct these mistakes. Right, so if you were to look at section B, all right, what is the effect of not correcting the error? Right, so we're going to start with not correcting the error first. What happens when you don't correct the error on the profit for the year? And then what happens when you correct the error for that on the profit of the year? Okay, so as you already know, if you don't correct the error, you have made a mistake. All right, when there's this idea of you making a mistake, you should use the words overstate or understate. On the other hand, in B part 2, when you correct the error, you are correcting the mistake. There is no mistake being made now. Because there's no mistake being made, we will use the word increase or decrease. So in summary, when a mistake has been made, you should use the word overstate, understate. But when no mistake is made, you are doing the right thing. You should use the words increase or decrease. Please pause the video now and try out B part 1 and B part 2 before checking your answers. Are you done with correcting? Are you done with going through the answers? Are we done with finishing this? Okay, this is the answer. You can do a quick check, then I will do a quick explanation. All right, so B part 1. Why is there no effect if you don't correct the error? There is no effect if you don't correct the error on the profit for the year because both accounts, trade payables and inventory accounts, are actually doesn't affect the profit for the year. They are not income and they are not expense. So there is no profit, no effect on the profit for the year. In the same way, correcting the error will also have no effect on the profit for the year. All right, let's take a look at the second mistake where there was an error of omission. Okay, so what is the effect of not correcting the error on profit for the year? So what you should do is to look at the two accounts and identify the account that will have an effect on profit for the year. Okay, so only utilities will have an effect on the profit for the year. And you were supposed to increase utilities, all right, but you did not. You were supposed to increase utilities, but you did not. And because you did not increase utilities, utilities is understated. And when utilities expense is understated, profit is too high, overstated by the same amount. What happens when you correct the error? Now, when you correct the error, you increase expenses and therefore profit decreases. Error number 3, where there is an error of principal. All right, so again, look at the two accounts and identify the account that affects profit. So what affects profit is the repairs expense. All right, you incorrectly recorded $400 as a repair expense when it is not a repair expense. So repair expense was too high, right? It was too high. And because repair expense was too high, repair is overstated. And with too much expense, profit is therefore understated by $400. So what happens when you correct this mistake? When you reduce repair expenses, you reduce your expense, your profit will increase. All right, let's take a look at the error of commission for error number 4. Now, in this situation, both accounts, right, both accounts are do affect the profit for the year because both of them are expense accounts. However, you see that one account is overstated, commission expense was overstated, and salaries expense was understated. Because one expense was too high and the other expense was too low, actually net there's no effect. One is too high, one is too low. So there's really no effect because the expenses offset each other within the less other expense section. And because they offset each other, right, even if you don't correct the error, there is no effect on the profit for the year. And even when you do correct the error, there is still no effect on the profit for the year. But can you don't correct? You cannot don't correct the error because there was a wrong classification of expenses. All right, and the very last expense, error of complete reversal. Look at the two accounts and identify the account that is affected, that affects the profit. And if you look at both, actually both of them do not affect the profit. And since both of them don't affect the profit, if you don't correct the error, there is no effect on the profit. Even when you do correct the error, there is no effect on the profit. All right? So, were you able to do this accurately? Now, if you are able to do this accurately, then you would be able to state the effect. You will be able to state the effect of correcting the error on the financial statements and state the effect of not correcting the error on the financial statements. The next thing that we will have to prepare is a new statement. It's called a statement to show adjusted profit for the year. I'm going to show you the format first, all right? Now, basically what happens is this. You have prepared your financial statements, right? And then what happens is that you already have a profit. And then after that, all these errors come up. Okay, so now we will prepare a statement to show the adjusted profit for the year. Why do you need to do that? Because basically, you've already prepared your whole financial statements. You did up your beautiful statement of financial performance and calculated your profit. And then you realize you made all these mistakes. So what to do? You're going to prepare the entire thing again. Don't want, right? So you are going to prepare this new statement, which just shows you what is the adjusted profit for the year after taking into account all the errors. Okay? So reason why we do this? Because we're lazy. We don't want to redo the financial statements again. All right, so I'm going to just show you the format of this new statement. So go to the last page and look at that. So it's a statement. So the format is a little bit similar. Okay, so you have to start off with your business name because you want to know who you're preparing this statement for. And then after that, you will write the title. The title is usually in the question, but it's good to remember the title. So the name of this statement is Statement to Show Adjusted Profit. Adjusted profit means what? The new profit after you take into account all the mistakes all the errors that you have corrected. And you need to give the year end. What's the year end? All right, so what is 2 columns, $sign in each column. And then what is your first thing that you will write? You will write unadjusted profit for the year. Now, unadjusted profit for the year, where does this number come from? Usually it will come from your statement of financial performance that you have prepared, the very detailed one. All right, so you will take the profit for the year because that profit, after you adjusted all your errors, is now wrong. All right, and then after that, what happens? You will write add error number what? And then what is the account name? And then error number, and then the amount. And then error number 2 or error number 3 or whatever error number is. And then what is the account name? And then the amount. Okay, so usually what happens after that is that you will add these 2 numbers up together. Forgot to draw a line here, which I'm going to do now. Okay, so I will draw a line right over here, right? And then the totals will be recorded here. Okay, so first you add all the errors that affect the profit, and then after that you list all the errors that affect the profit. Then you list them out one by one. After that, you add everything up together, and then your adjusted profit for the year is your new profit. after you have corrected all your errors. So in short, you start with the unadjusted profit for the year from the financial statements. You add all your errors that affect the profit, that increases the profit. You deduct all the errors that reduce the profit, and then you get your final adjusted profit for the year. All right, so let's go back one page and take a look at section C that asks you to prepare the statement to show adjusted profit for the year for exercise example number 1. Okay, so we're just going to use example number 1 and prepare a statement to show the adjusted profit for the year. Okay, so what we're going to do as usual first is to write the business name and the title. So the business name is Rebecca Trading. The title is Statement to Show Adjusted Profit for the Year. $2, right? And we are going to start off first with profit, unadjusted profit for the year. Okay, now question didn't state this, but let's take it that the unadjusted profit for the year from the financial statements is 22,900. Now after that, you are going to add all your errors that will increase the profit, right? So how do you identify errors that will increase the profit? You go to your errors, journal entries to correct the errors on 31st December 2019. And then you take a look at all the credit items. Why credit? Because income is a normal credit account, right? So generally, income normal balance is a credit. So this helps you to remember any account, if it is an income or an expense, this account, if there is a credit correction, then it will increase the profit for the year. I repeat again. If this account affects the profit for the year, that means it's an income or an expense, and the amount is in the credit column, then it will increase the profit for the year. Likewise, if an income or an expense account has an amount in the debit column, it reduces the profit for the year. How to remember it? Credit increases because income normal balance is credit. Debit decreases because expense normal balance is debit. Okay, so let's take a look. I'm going to start with increasing the account first. So the two items that increase is 400 and 1,005. Okay, so I'm going to start off with 400. Going to record that first. Okay, because repairs expense is in the credit column, it will increase profit for the year. So I will add repair expense, then I'll write error 3. The next item that will increase profit is this commission expense because it's in the credit column. So what I will do is I will also continue to write that under repair expense. Under add. So add a commission expense. All right, 1,005. I add the two values up together in the second column. Next, I go on to what will decrease my profit. So utilities expense, because it's in the debit column, will decrease my profit. So I have less utilities expense. And salary expense will reduce my profit because it's in the debit column. So I have less salaries expense. I add the two values up together and I have 2007. Now after that, all right, I will add the three columns, the three numbers up in the final column together. And that is my adjusted profit for the year, my new profit for the year. All right. So you can pause me now and copy this down into your notes. Okay, and really that is the end of the chapter. What have you done for this entire chapter? So in the two-part videos, right, you have learned how to correct errors that you made. You have learned to state the effect when you correct the error. You have learned how to state the effect of not correcting the error. You have learned how to prepare a statement to show the adjusted profit for the year. Now, in addition to the above, you will also need to learn how to practice to prepare an adjusted trial balance after taking into account all the errors. Actually, you did this when you were in Set 3, but this one just revision. Then, you will need to learn how to prepare an adjusted statement of financial position. All right, so it's a really easy chapter and hope that you are able to understand it.